Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis, and it's going to be on ExxonMobil today, ticker XOM. Now, the reason for the analysis on this is because it did close up around 1% today, so not really anything to stand out as of there, but it is going to be providing some good trading opportunities, at least looking at the standard deviation side of things. So to get straight into it, as always, we start off on a clean daily chart so we see if there's any gaps that need to be filled. And as we can see right off the bat, we got one around 57.60. We have another one down at around 63.50. And we do have another one around this 65.90. Now there may be some other smaller gaps within these areas, but these three are quite obvious and stand out quite easy, so they are likely to have a reaction when price comes into these levels. But more importantly, we'll now go onto the standard deviation channels, so we can start seeing where would we start being short bias on it, and how would we be looking to short this. And now, if you're looking down over on the 4 hour, you can see quite clearly that we're starting to form a divergence, which is always nice to see when you're looking to be short bias on a stock such as ExxonMobil. And firstly, why are we short bias on this? Now, long term, again, it doesn't really give us we're not short or long bias, but we're looking for short-term trades. And when looking at ExxonMobil, we do see it priced a bit too high, and it's something we would expect to pull back. And the reason for that is it's up by the second deviation and coming into the third deviation. And when we see prices around here, we expect prices to pull back, and for ExxonMobil to come and try and push towards the statistical mean, which in this case is around $65. So really we see around a $10 drop from where we are now. Now, what levels are we trying to be short at? From now, we are actually at a level where we'd be happy to short, because from $74.25 we're at our first second deviation. So from here is an area where we would look to start being short bias, then coming into $76, as we can see on the second deviation on the daily, is also kind of that next short bias location. And then we do have two more short locations if we're coming up to around $78.75, and at a very big push around $81. Now these are all levels where we would expect the stock to start pulling back. Obviously right now we pull back on the original second deviation, pulled back to the first, and it's trying to push higher. We've now touched the second deviation on the daily, it's starting to pull back. So we can see if this is going to be the overall reversal. We have started to add a bit of a small short on this by doing some debit spreads, or bear debit spreads, just as a way we don't have to so much time it, but we do expect the market to pull back, so that's how we're trading it. But it is possible for ExxonMobil to push higher, and obviously if it does, then we do have short targets around $78.75 and $80.1, areas where we look to start being even more short bias if it does continue up. And again, like I said before, we are seeing a divergence when looking at RSI. Momentum is slowing while price is still going up, which is showing that the reversal is coming more and more likely. Doesn't mean it has to happen at the second deviation, but we do want to build up some size just in case this is a reversal point, but it could always push towards the $78.50 and the $81 mark. One thing that would be good to see, and would add obviously more confidence on the trade, is if we start building a divergence on the daily chart. We are seeing it obviously kind of start to hold, which you could somewhat count as a deviation, but not a very picture perfect one. But either way, it has come into a short bias location, and is something we're looking at short bias from now. Now, where are our targets on this? Really, the first target we're going to have is these first deviations, so around $70/69.50 is where we would look to lock in either a tiny bit of profit, or move our stop. And then obviously if you're looking at it for something more of a day trade, then that's probably going to be your target. But as we're looking at it more for swing trades, that's more of just a first target, and we would wait for it to overall kind of fall that bit further. $65.90, again an area we would look to lock in kind of the majority of our profits. Usually we don't like to lock in the majority of our profit at gap fills, it's just an area that we focus on. But as we can see, the statistical mean is very close to that. And as we can see, if we do the measuring tool, it would only provide around another percent upside, so obviously that would be nice to catch, but it's not something we're going to risk turning into kind of a much smaller winner. So we may lock in the majority of profits at 59 65.90 and lock in that bit more if it continues a bit further down. But either way, it's about 70 cents, so yeah, equivalent to about a 1%. So really, that is going to be our key area. I mean, between $66 and $65 is going to be our final key level, where we would look to close out our swing if we are short. But that is really the overall kind of breakdown on ExxonMobil. Don't want to do any targets if it goes below there, but just because we would probably have a new video by then. But in case there isn't, at around $60.50, that's where we would start being more long bias on it, and we would start to look to get long on the stock. But overall, that is a breakdown on ExxonMobil. Hope you enjoyed it. If you did, don't forget to drop a like and subscribe if you haven't already. And that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money.